Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Vivek, good afternoon. A decent day of moves so far. Gains coming in, and we have a 100-point gain on the Nifty right now. But a lot of outperformance coming in from the Bank Nifty, and that is led by what PSU Banking Index is doing. The PSU banks, that index is up 2%. We have the Bank Nifty, which is up 0.5%. The advance decline ratio continues to be in the favor of advances, but the mid-cap index has come off from the highs of the day. So it's up around 0.1%, and we do have the small cap index, which is doing well as well. A lot of individual names which are on our radar today.
Good afternoon. Absolutely right. The advance decline ratio is something that is quite strong, especially towards the broader end of the markets. You spoke about the PSU banks doing very well. In fact, in the last half hour, all of the PSU banks have all surged to the day's highest point. What's also doing well are some of the private banks. So look at a name like Kotak Mahindra Bank. That particular stock has also surged to the day's highest points. But on the other hand, within the BFSI space, the insurance stocks have taken a bit of a knock. So names like MFSL, ICICI Lombard, even HDFC Life and SBI Life, all of these stocks have seen some profit booking come about. In fact, ICICI Lombard is now down almost 2% today. But Sonal has walked across to the wall. This is our special segment, Midcap Movers. Sonal, take us through all of the midcaps that are moving around in the session today.
Yes, midcaps are doing well. So some notable gainers from that list. Let's start with KNR Constructions, because that stock is surged. It is at the day's high, seeing gains of around 8 to 9% as we speak. Garden Reach Shipbuilders is also up 7% right now. Dhani Services, that stock has been in focus, up 7% right now. We do have Kitex Garments. The textile space generally has been in focus because of tariffs and GST cut. Today, that stock is logged in upper circuit. We have Bellrise Industries, couple of brokerage notes coming by there for that particular name. So that stock is higher by 6.5%. Kalyan Jewelers is the other one, up 3.5%. Red Tape Limited, we don't talk about this stock very often, but on huge volumes, we are seeing that surge come by, 7.5% on that one. We have MCX as well, up 4%. We'll talk about that in greater detail on the back of comments coming in from SEBI. So we'll discuss that with our reviewers as well. In terms of losers, we have Moschip. Now remember, that stock surged in last couple of trading sessions, so some profit booking is what is seen right now. One MobiKwik, down 3.5%. We have MIC Electronics and Vishnu Prakash R. Punglia. All these stocks were big movers in last 1 week, so some profit booking which is on the cards as we speak.
Thank you so much, Sonal. All of the movers as far as the broader end of the markets are concerned. But moving on to a very important development that's transpired over the course of the session today, the rupee has risen to a near 3-week high, even as dollar index has plunged to a 4-month low. Rupee bulls are also feeling reassured by the apparent thawing of the India-US relations, and with FPIs are also turning into buyers. The Indian currency is up 0.3% today, and it's the best performing EM currency. Lata has more.
Well, that's the gist, actually. The rupee, after a long lean patch, the worst performing currency, down 2.5%, despite the dollar being down 10%, dollar index being down 10% this year, has kind of erased some of the losses. This morning, it was up at about 87.72, which makes it the highest in 18 days. Not quite a 3-week high, but the highest reading in September itself. And more importantly, today it is the best performing Asian currencies. To be fair, most EM and Asian currencies are up against the dollar because the dollar is at a 4-month low at 96.75 as the dollar market awaits Fed rate cuts from the Fed, as well as probably some cool talk, probably some dovish talk indicating more cuts. And that's why you're seeing the dollar decline. But there is more positivity, particularly for the rupee. We are rising more than other currencies because of the birthday tweet that came from Trump and the immediate reply from Narendra Modi. More importantly, the heavy FII outflows have petered out, and there have been minor inflows as well. So at least the negativity of foreigners buying dollars and taking it out of the country appears to have ebbed. The bond yields have also started falling a bit, and that means bond losses are less. There is a little bit of an expectation that some bond purchases may also happen, although the JPM index has reduced the weightage, or is likely to reduce the weightage of India and China. Nevertheless, it's turning positive for the buyers as well, and that's why you're seeing this recovery. Actually, dealers were always expecting that this 87.75 will be a very good support for the dollar. From there, the dollar may start rising. Now people are started talking about 87.50 and 87.20 as supports for the dollar or whatever, resistances for the rupee in case the trade negotiations turn out to be fruitful, to be successful.
All right. Thank you so much, Tata, for explaining the moves. So big moves in rupee and dollar index as well. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Welcome back to Mid-Cap Radar. Aditya Birla Fashion and Retail shares are higher in trade today after the company launched a new brand. Our colleague Shilpa caught up with Sangeeta Tanwani of Aditya Birla Fashion and Retail on the sidelines of the MAPIC Retail Summit, where they launched a new value retail brand, Owned. This will replace its existing value retail brand, Style Up, and this takes on Trends Studio.
This is a new brand that we have just launched, and we've announced the launch at the MAPIC event today. This brand is very sharply targeted to the Gen Z. It is actually built based on very deep understanding of this customer segment, which today plays a very significant part in consumers' spending, and they're a very different generation. This particular brand is all built around the youth culture, and therefore the inspiration that we have in terms of the clothes, in terms of the experience that we want to deliver in the stores, and equally in terms of communication, is all inspired by youth culture.
Right. And how is this different from Style Up, which is your existing value brand?
So Style Up is something that we were testing over the last couple of years. This brand is going to expand across the footprint. The geographical footprint is going to be wider, and the few Style Up stores that we have will in fact migrate to Owned.
Right. So you will still have two brands, Owned and Style Up, existing simultaneously?
No, we will have only one brand. As I said, Style Up will migrate to Owned.
To this.
Yes.
So currently, what is this plan in terms of store expansions?
Yes.
How many are you planning to open? So I think you already have a portfolio of 49 Style Up stores. So you will start off with 49 Owned stores in that sense?
We opened already in the last 1 week. We have opened 5 Owned stores, which are new stores. Over a period of time, Style Up stores, as I said, will migrate, and we will continue to open new Owned stores. And by the end of this year, we'll have about 100 Owned stores.
Right, sorry. Just in closing, what was the idea, though, of migrating from Style Up to this? Is there something that didn't work with respect to Style Up that you decided to migrate?
In fact, our success at Style Up gives us the confidence to really create a proposition like Owned. It's just that, like you rightly said, this is a sharper brand, and therefore we made a choice to keep one brand. We believe this brand is the one which resonates more with Gen Z. So was the case with Style Up, and eventually as a portfolio it makes sense to keep one brand, and Owned is our new brand, which we believe will drive quite a or will open up a new chapter in the value fashion.
All the stores migrate?
In the next few weeks.
All right, 4% higher on that stock. That's the word coming in from the management. But with that, we'll slip into a short break. When we come back, we'll get you more on the markets and a lot of stock-specific action as well. So stay tuned for that. Welcome back. You're still tuned in to Mid-Cap Radar. SEBI Chairman Tuhin Kanta Pandey has batted for deepening India's commodities market by increasing the participation from institutional investors. Listen in to what he had to say.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Well, very important comments coming in there from the SEBI chief. More participation may be allowed as far as FPIs are allowed within the non-agri commodity space. Well, Vamakshi has dug up more details on this particular development and what it can mean for MCX. Vamakshi, over to you.
Well, absolutely, Vivek. Now in his comments, he said that they would be that there is a proposal to allow FPIs to trade in non-cash settled non-agri commodities. Derivative contracts is currently under examination. Now, keep in mind that this is important because as of now, FPIs are allowed to only trade in cash settled non-agri commodity derivatives as well as their indices. Now, in the annual report that came in from SEBI on August 12th, they said that they would be considering reviewing the existing framework, and they would also explore alternatives to allow FPIs and non-cash settled non-agricultural commodity derivatives, which is what the SEBI chairman had indicated in his comments today. Now, why is this important? That is because currently FPIs are only allowed to trade in the cash settled contracts. Therefore, they largely trade in crude oil as well as natural gas. Now, analysts say that FPI share would be around 5% in total volumes and 8% in the energy basket. Now, with the regulatory approval, if that does come into trade in the non-cash settled non-agri commodities, they will also be able to participate in bullion as well as base metals. Now, the other comment that came in from the SEBI chairman was that they will continue to engage with the government to resolve GST-related challenges for participants who wish to receive or deliver commodities. Now, analysts have largely suggested that GST-related issues have always prevented offtake in volumes which are delivery-based, like in gold and silver. So overall, his comments are extremely positive for MCX, and that is because it will give a boost to liquidity. It will help in deepening India's commodity markets, and therefore, volume uptick for MCX could be expected in the long run. So, that is the development around MCX, and resultantly, the stock is flying high in trade today.
Explains the move on MCX. Thank you so much, Vamakshi, for joining us with what this could mean for the stock and the company overall. By the way, markets have come off from the highs as we speak. 80 points higher on the Nifty, but yes, it's a fall from the highs. The mid-caps too are under some pressure. So yes, they are up 35 points, but just at the flat line with some positive bias. So very close to getting into the red. In fact, the advanced decline ratio, those lines should come up for you on the screen. Those are also getting narrower. So for 1,600 stocks on the advancing side, there are around 1,100 stocks declining as well. So we'll track the mid-cap index very closely. The small-cap index, that is the one that should be up for you next because, we are seeing that move on the mid-cap index. Is that seeing an impact on the small caps as well? Because yes, the even small-cap index has come off from the highs of the day. We'll keep tracking all that action for you. But for now, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned. Your stocks when we return.